Hi everyone, welcome to InfoCriz. Today we will discuss the most commonly asked accounting journal entries in job interviews. Many a times when interviewers want to check basic accounting knowledge of a candidate, they ask journal entries which are critical for businesses. This video will be very useful for people aspiring to get jobs in finance and accounts or those who want to level up their career. Thus, please stay with us till the end of this video as all the accounting entries are equally important. Now, let's get started. Let's take up the question number 1. How do you pass journal entries for prepaid rent? In order to answer this question, let's take an example. Imagine a company ABC Limited paid 6 months advance rent for office at the rate of Rs 1 lakh per month, via fund transfer from the bank. Thus, the total advance rent paid on 1st April 2024 was Rs 6 lakhs. When the payment of Rs 6 lakhs is done, two accounts are affected. One is the prepaid rent account, which is an asset, increases by Rs 6 lakhs, and the second is bank account, which is also an asset, decreases by Rs 6 lakhs. Now, let's refer to the modern rules of passing journal entries, which I had explained in my earlier videos. In case you have not seen the same, you may watch it at the end of this video. As per these rules, when the value of any asset increases, we debit the account, while on decrease, we credit the account. Thus, the journal entry to be passed in the books of ABC Limited on 1st April 2024 would be debit prepaid rent account Rs 6 lakhs as there is an increase and credit bank account Rs 6 lakhs as there is a decrease. This journal entry would be passed towards the payment of advance rent for 6 months, that is from April 2024 to September 2024. Subsequently, at the end of first month, when 1 month's rent of Rs 1 lakh is recognized, two accounts are affected. One is rent, which is an expense account, increases by Rs 1 lakh, and the second is prepaid rent, which is an asset account, decreases by Rs 1 lakh. Again, referring to the modern rules of passing journal entry, expenses account is debited on increase and asset account is credited on decrease. Thus, the accounting entry to be passed in the books of ABC Limited on 30th April 2024 would be debit rent expense account for Rs 1 lakh as there is an increase and credit prepaid rent account by Rs 1 lakh as there is a decrease. This process would continue till the end of 6 months, by which the entire prepaid rent of Rs 6 lakhs would be fully recognized as rent expense. Hope you have understood this journal entry. In case of any doubt, you can always put a question in the comment section. Let's look at the next question, that is question number 2. How do you pass journal entries for deferred revenue? Suppose the company ABC Limited receives 12 lakhs in bank as advance payment against a 1-year service contract effective 1st April 2024. On receipt of the amount of Rs 12 lakhs in bank, it is initially recorded as deferred revenue because the service has not yet been delivered. Thus, two accounts are affected. One is the deferred revenue, which is a liability, increases by Rs 12 lakhs, and the second is bank account, which is an asset, also increases by Rs 12 lakhs. Now, referring to the same rules of journal entries, when the value of liability increases, we credit the account, and when the value of an asset increases, we debit the account. Thus, the accounting entry to be passed in the books of ABC Limited on 1st April 2024 would be debit bank account Rs 12 lakhs as the amount received increases the bank balance, and credit deferred revenue Rs 12 lakhs as the balance of this account increases. This journal entry being passed for the advance amount received in bank for 1-year service contract from April 2024 to March 2025. Subsequently, at the end of first month, when 1 month services are delivered, revenue for that month is recognized. Thus, two accounts are affected. One is revenue from services account, which increases by Rs 1 lakh, and the second is deferred revenue account, which is a liability, decreases by rupees 1 lakh. Now again referring to the journal entry rules, liability account is debited on decrease and revenue account is credited on increase. Thus, the accounting entry to be passed in the books of ABC Limited on 30th April 2024 would be debit deferred revenue account for rupees 1 lakh as there is a decrease and credit revenue account for rupees 1 lakh as there is an increase. This process would continue till the end of 12 months, by which the entire deferred revenue of rupees 12 lakhs would be fully recognized as earned revenue. The next question is, how do you pass journal entry for cash discount allowed on sale? Suppose the company ABC Limited sells goods worth of rupees 50,000 to a customer with a cash discount term of rupees 1,000 if paid within 7 days. The customer pays rupees 49,000 within 5 days, availing the cash discount of rupees 1,000. In this case, 3 accounts are affected. First is the bank account, which is an asset, increases by rupees 49,000. Second is discount allowed, which is an expense account, increases by rupees 1,000. And third is the debtors account, which is an asset, decreases by rupees 50,000. Now, referring to the rules of journal entry, asset account is debited on increase and credited on decrease, whereas an expense account is debited on increase. Thus, the journal entry for payment received from customer after adjusting cash discount would be debit bank account rupees 49,000, debit discount allowed account rupees 1,000, credit debtors account rupees 50,000. So this is the payment received from customer after adjusting cash discount. The next question is, how do you pass a journal entry for the purchase of inventory on credit? Suppose the company ABC Limited purchases inventory worth of rupees 50,000 on credit. That is, they will not make the payment immediately. The payment will be done after few days as per the payment terms. In this case, 2 accounts are affected in the books of ABC Limited. First is the inventory account, which is an asset, increases by rupees 50,000, and the second is accounts payable account, which is a liability, also increases by rupees 50,000. Now referring to the rules of journal entries, when the value of an asset increases, we debit the account, and when the value of a liability increases, we credit the account. Thus, the accounting entry would be debit inventory account rupees 50,000, credit accounts payable account rupees 50,000. So this particular entry is passed towards the purchase of inventory on credit. Now, question number 5. How do you pass a journal entry for an expense due but vendor invoice not yet received? Imagine the company ABC Limited is required to pay housekeeping charges to a service provider for the month of September 2024 but did not know the exact amount as invoice was not received from the vendor till 30th September 2024. In that case, a provision entry needs to be passed by ABC Limited as on 30th September 2024 for an estimated amount. Suppose the estimated amount for September 2024 housekeeping charges is rupees 25,000. In that case, the accounting entry will involve 2 accounts. Housekeeping charges account, which is an expense account, will increase by rupees 25,000, and provision for expenses account, which is a liability account, will also increase by rupees 25,000. Again referring to the same rules of journal entries, when the value of an expense increases, we debit the account, and when the value of a liability increases, we credit the account. Thus, the accounting entry for provision of housekeeping charges for September 2024 would be debit housekeeping charges rupees 25,000 and credit provision for expenses account rupees 25,000. Hope you have understood all the journal entries that we discussed today. In case of any query, please put your question in the comment section. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. Please subscribe to my channel for many more interesting videos in the field of finance, accounts and costing. Thanks for watching.